Welcome to Business with Beers. I am your host, Brian Beers. This is a podcast for business owners who want to scale their business to massively grow their income and contribution by investing in people, process, and technology. This week, we've got a great show with Holly Williams. Holly is an entrepreneur on a mission to educate and share private investment opportunities with successful, high-earning professionals. In this episode, she talks through some of the money management myths that we've been taught and a few secrets on how the wealthy do it differently. This is a great episode with lots of different topics that we cover, from infinite banking to sponsorships, general partners, limited partners, and a number of others. It's a great show. But before we get in, I want to tell you about an extraordinary offer from a company that I am currently using called MyOutDesk. MyOutDesk offers professional virtual assistant services, and they happen to be rated the #1 virtual assistant company by Tech Radar with over 700 5-star reviews. My friends and associates are among the thousands of satisfied customers. I get a lot of listeners asking questions on how do they scale while lowering the costs. I use MyOutDesk and save 70% versus a traditional in-person hire. For Business with Beers listeners, MyOutDesk is offering a free double your business strategy session. Simply go to myoutdesk.com/beers, as in my last name, to schedule a call. And on this call, you can work one-on-one with one of their business consultants to design an action strategy to hire and launch a virtual assistant into your business today. If you'd like to learn more about the topics covered in the podcast, check out brianbeers.com to sign up for my free newsletter, delivering content directly to your inbox. Welcome to the show, Holly.
Hey, it's so great to be here. It is a great day in New York here, and I'm looking forward to visiting with you.
Fantastic. Well, this wouldn't be Business with Beers if I didn't ask you that. Me and you are at a bar in New York. What would we be drinking?
Well, I would probably be drinking a Diet Coke.
Okay, great.
Because
Awesome.
I love it. And that's kind of what I would be drinking, or coffee.
Yeah.
One of the two or both.
There you go. Hey, so if you could, for those who don't know, could you kind of share your story, maybe from the time, I don't know, you were 18, kind of your journey in your career and kind of where you're at now, and then we'll dive in it from there.
Sure. So, I did what I thought were all the right things, and went to school and got a job out of school, majored in advertising, whatever, and started putting as much as I could away in a 401k. Although back then, 401ks, you had to stay with the company for 2 years. You couldn't, you're limited in how much you can put away, and they've changed the laws a lot since then. But I did what you're supposed to do. I saved 10%, whatever. I had 2 years of living expenses saved, all the right things. And then everything that we're taught, right? And invested in mutual funds. And, then had the opportunity in the early 90s to come to New York City. I grew up in Texas, and I had the opportunity to move to New York City in the early 90s and got here and loved it. And had a 30-year career in advertising, and, got to the point where I was making more money than I ever thought that I would, or that my parents had. And I began to notice that, I was paying 50% of that, at least in taxes. And it was pretty crazy. And my salary I wasn't making more money. I had sort of reached I clawed and scratched my way to the middle, I tell people. But
plus New York City, higher living expenses probably than other places in the U.S.
Yeah, it's all what kind of life you want, right?
Yep.
It's all about lifestyle at this juncture. But the biggest aha moment was my parents, and watching them, who also did all the right things, watching them just about run out of money. And I watched taxes go. We're told so many things like your tax bracket is going to go down when you retire. And that's nonsense, unless you want to downsize to a little condo and never go anywhere or do anything. Most people's tax brackets you need more money because you want to take the grandkids to Disney World, all of those things. And it's just a myth, right? That we're all taught. And then the first thing that a financial advisor asks you when you sit down with them is, how long do you expect to be retired? And so our whole system, if you will, and what I was taught is all designed for us to die broke.
Yep. Yeah. It's like a battery that we're charging our whole life. And then we reach 65 or 70. And that point, no more energy goes in, no more money. It's just, we're depleting the battery down to zero. And it's this budgeted, how much you're going to spend, and then you have Social Security, right? And it's a formula.
Yes. It's so it's the game that we play, and the wealthy people. So then the next thing that happened along about the same time was a friend of mine started investing in apartment complexes. And I discovered this whole world of passive equity investing. See, there's a difference. People, when you're buying, they call them equities when you're buying stocks, but I mean, theoretically, yes, but the tax treatment is not that, right? We are taxed as, you have to sell the asset typically to make the money. Mm-hmm. And that's the problem with the stock market, right? And meanwhile, by the time it gets down to us, the stock market's a secondary market. It's not a primary market. So Warren Buffett is not buying stocks like we are. Right. Mm-hmm. Or I'll speak for myself. I mean, he doesn't go into his E-Trade account and buy stocks. Right.
Yeah.
So there's a whole world out there that, frankly, I didn't know existed. And when we think about private investments, you think automatically Bernie Madoff, because that's all we hear about. Mm-hmm. But it's really not the case. The wealthy have been doing things very differently for forever. And, I didn't know this whole world existed. And most people don't know that this whole world exists. It's a club. And so over the years, I have diversified, and diversifying to a financial advisor means all kinds of different types of stocks. And
we're still living in stocks, bonds, annuities, right? Everything that's related to the public markets.
Everything's related to the public market. Everything is related, and we are brainwashed to, if it says fidelity, it must be safe. And it's people think real estate, buy low, sell high. They don't understand, or at least I didn't. And most people from the coasts don't understand that you can really buy real estate that cash flows.
Mm-hmm. Okay. So your friend got you into this apartment building, passive equity investing, as you called it. And then what, take us from there to, I guess, where we're at now.
Well, so when I got my K-1 at the end of the year, I had made these distributions. These checks were showing up in my mailbox or whatever, my bank account. And I was making money from this investment that I made. But then I got this K-1 and it showed that I lost money. And so that was when the light bulb went off, was, oh my goodness, this is like buying a house, because I knew about real estate, right? But mm-hmm. This is like buying a house and not having to deal with a plumber and getting all the benefits of owning that home, but limiting that risk because you're spreading it out over, 200, 300, 400 apartments, mm-hmm. right? And so when you lose a tenant, it's not a disaster. So I became obsessed with, multifamily apartment complexes and learned all I could about them and invested in whatever I could, right? And then began to syndicate them myself. And what shocked me the most was that my colleagues, my peers in the advertising world and my family they were afraid to invest. Some of my best friends are like, oh, I don't know, I lost money in a land deal. And, a couple of years ago, and, one by one, they're calling me, mm-hmm. Like, okay, so no, wait a minute, what are you doing again? But it's a mindset, because the wealthy think about money differently. They think about keeping it in motion. They think about investing in cash flowing assets. They think about generational wealth. So whereas we're taught, and the world thinks about how much money do I need to retire,
yep.
broke.
Yep.
And how can I make sure I don't outlive this? And then they try to sell you annuities, and Wall Street has an answer for everything.
Yep.
Right. And
as long as you stay
involves,
within their box, right? You stay in their sandbox.
It involves Wall Street making a whole lot of money.
Yep. Okay. So you quit your job. It sounds like at this market agency, you go full board into real estate,
right?
Not only as a passive investor in other people's deals, but you are putting on your own deals. So
correct.
Talk to us just about, for people who don't know, what's that structure look like? So you're a sponsor of a deal. Walk us through who are the players, and like, how does a deal come from nothing to getting close to those distributions?
Sure. So multifamily has traditionally, this is nothing new, right? When you go into a garden style apartment just about anywhere in the country and ask the people that work there, hey, who owns this place? They'll give you the name of the management company. But who really owns them are, A-Rod, right? His company, right? And all kinds of Wall Street hedge funds. When you invest in a REIT on the public market, a real estate investment trust, they own apartment complexes, they own commercial real estate. You're investing in that, but you're not getting the tax benefits of that typically, right? So you're really buying into a mutual fund that invests in real estate assets.
Yep.
So what we're doing is buying the asset ourselves, and we get lots of people together that we know. I mean, it really is a club. It's friends and family almost. We get them together, and we all together go and buy an apartment complex. So you need really three things. You need someone in charge of managing investors, and you need the money, and you need somebody that is an underwriter, a group that underwrites and looks at the numbers, because what you want is to look for something that's cash flowing and that you can afford a 20 to 30% drop in net operating income of that asset before you get into trouble, right? So you want something, conservative. And so that takes a lot of work to find. So this takes, and then you have to have someone, a group that manages the management company. So, and that's what these big commercial real estate firms and hedge funds and all that, that's what they do, right? So if we're going to do this privately, we need a lot of people, right? We need people with the general partners need to have a combined net worth of the amount of the loan, and that could be huge. So, I mean, I don't have a $50 million net worth on my own. So I would be investing with Goldman Sachs. That's what they require, right?
Yeah.
Usually, typically to invest in one of these deals, you had to do that, right? You had to have that kind of money. And so I have partners, and we work together, and I have investors that just invest in, we're doing 3 1031 exchanges right now. We did great with the asset, and we were rolling. Most investors are rolling it over into another with us.
So the syndication has two parts, right? So there's the GP, which is the people like yourself and your other partners who do all the work, right? They find the property, they raise the money, they get the debt from the bank, they underwrite it, they find the property management company, or I guess manage it themselves, depending.
Right.
And then there's the limited partners, which is what you first did, and which I am as well. And actually,
you're an investor.
One of your deals, yep.
Yes.
And others, and our role is to underwrite you, to say, hey, are you good at underwriting this deal, or do you have a track record? And then do we believe in the business model, right? Do we believe in that?
It is executing a business plan. That is correct.
Yep, that you can execute this, and are your projections realistic? And it takes some education on the LP's part to do that. But so once we trust somebody, we trust you, right? We write a check for this deal, and then we're done, right? The limited partners are at that point done, and their only responsibility, like you said, is to cash the checks every month or every quarter, how often they come in. And then the general partners are the ones who actually run the business every single day, managing the asset.
Communicate with investors. You get my monthly report, monthly, communications and all of that. And
so it creates, scalability on both sides, where, as an investor, I can invest in multiple deals, multiple asset classes, multiple locations, right, with different operators to spread out my risk and diversify. And then for you guys too, since it's not, your own money, you're not limited by money, right? So then you can, as often as you can find deals and you can manage them, you can continue to grow too. So
exactly.
It's these two parts coming together.
And I watched my parents, run out of money, right? Because they needed money to live. And so they had to take money out of their account. I make enough money passively, not even on the general partner side, to live. And that's when I left my job, because I've done over 20 syndications, and about over 15 of those have been on the general partner side, right? So, and I invest in every deal that we do. So myself, so my personal money. So. Yeah, so
I think it's a great business model for both people, right? And it's just a matter of finding people who are good at it, at least from the LP side. That's what we want to find, people who are good at it.
Equity is still there. That's what people don't understand. The equity continues to grow, and then you can roll that over, and there's favorable tax treatments, for real estate, and it really is. This can be a life-changing thing for a lot of people, and it certainly was for me.
Okay, great. So one of the things we were talking about before is you had mentioned you said no banks, right? You want to try to live your life, I guess personally maybe, with minimal bank involvement. Can you explain kind of what that means, and then how does someone go about, what does it mean? Why would they want to do that? And then how, as at least a primer of what that looks like?
Well, you need a bank. I mean, banks are necessary, right? But banks, people don't realize that banks are, first of all, the largest purchaser of life insurance in the country are banks. So the wealthy people have heard about a concept called infinite banking. And that when I discovered that was another aha. It's like, wait a minute, you're telling me that I can put money into a life insurance policy, and we're sold that we just sit there and then they pay people when we die. But you can actually use that and keep money moving and borrow money from yourself and pay yourself back. And so there are a lot of things like that, that, you can minimize the amount of dependence you have on a bank. Banks make a lot of money, and I'm not opposed to a lot of money, but what we're doing in the US, we got off the gold standard in the 70s. And so we're printing money a lot, and we're hearing a lot about inflation right now and all of that. Banks are only required to keep 10% of what they're lending out in reserves. So if I put $1,000 in a bank, they take 900 of those dollars and they lend them to someone else at whatever, 4, 5, 6, 7, 8%, whatever. And they're paying me 0.0002 or whatever they're doing. Right.
Yep.
And so that's how banks make money.
Yep, they can lend 10 times pretty much the amount of what's put in there, right?
Correct. It's called fractional lending.
Yep, because they're betting that not everyone's going to come to pull their money out at the same time.
And right? Betting is the key word.
Yep, because if that happened, they wouldn't have the money. I guess that's where the Federal Reserve kind of comes into play, because they allow this, right? The government. This is
they're
part
the ones printing the money.
Yep.
So it's all so in. In the Depression in 1929, I had a run on the banks, and that was what, led to FDIC insurance and all this stuff. But if in 2008, when the banking system collapsed, and the government stepped in to save it, basically, there was a limit. The banks limited the amount of money that you could take out of the bank per day. Out of the ATM. I mean, I don't remember what it was, but it was $500 or $1,000 or I don't know. Maybe it was higher than that, but you couldn't go get all your money out. So what's insured? It's insured by the federal government, which I think the federal government's going nowhere, but I certainly am about hedging my bets these days. So So,
yeah, and one of the best ways is the infinite banking policies. We've touched a little bit on that throughout the podcast. I've had MC Lobster on, Cash Flow Ninja, who's an expert in that. And like you said, the idea is that this life insurance policy is a high yield savings account that has death benefit and all these other things, but you can put your money into the policy. And then you also have the ability through a line of credit to access the money and use it to invest in a syndication or anything you really want. It's your money versus Correct. A traditional policy. Once the money goes in, it's locked in. You can't leverage it at all. And so that's how you're just storing money in an insurance policy instead of storing the money at a bank is the general concept to wrap your head around. Yep.
Correct. And it's like I'm storing money in real estate instead of storing money in a bank. Storing money. I mean, I've began to learn a lot over the last year about cryptocurrency, and I'm a believer in that as well. But I don't bet the farm on any of this stuff. But I will tell you that my net worth has increased exponentially since my parents passed away in 2011, and I discovered passive real estate investing. And I will also tell you that it doesn't look at all like what it used to look like. I looked around and I said, oh my goodness, almost everything I've saved and worked for. Yes, I had a primary home. Yes, I had some real estate, but really what it was a mutual funds and with a financial advisor, and that it was just really, so I have very little with that poor guy, but I've gotten him into real estate a little bit, Yeah. And so it's really a mind shift. And that's why I wrote Hidden Investing, right? Because I really go through these myths. And so once you really understand that what we're told is not the whole story. I mean, in business school, I didn't learn about anything but the stock market. Mm-hmm. I really didn't. I didn't think there was anything else, anywhere else to put my money. And there's a ton of places that the wealthy put their money that we either don't have access to because of the accredited investor thing, which is a whole other topic, or our net worth isn't large enough. I mean, if you want to get in the Goldman Sachs, wealth management thing, you need a $30 million net worth. You need, a large percentage of that needs to be liquid. I mean, there's a lot of money flying around that I didn't know even was around.
Okay. So Hidden Investing, what were some of the biggest, I guess, learnings from that book when you wrote it or when you did that research?
Sure. So that 401k is not going to get you through your golden years.
Okay. Yep.
Right. You're the experts, we trust the experts, The experts don't always know.
Yep. Yeah. It was kind of funny. I had, out of college, friends or people that I just, knew, and they get a job with, I don't know, Goldman Sachs or Wells Fargo, whatever. Any of them. And then they're like trying to pitch me on them managing my wealth. And it's like, how much more are they going to know than me? They've had like a year into this thing, and it's, I don't know.
That's just it. I don't think they come to work. They just go to college. They learn what they want, the colleges want us to learn, which are funded by Wall Street, right? And then they go and into Merrill Lynch's training program or whatever, and they learn. So they're not.
Yep. And it's just a matter of taking the money, putting it through their program, right? Making the recommendations based off, the analytics or, whatever it is. But it's not the like personal connection. Like if I lose money, they're just gonna say, well, it's the market, I have no control over that. Right. It's everyone pointing fingers, but what changes when people go down this path of private investing is the person has to take responsibility, right? If I control my money now, I'm my own fund manager of a source,
You're
right?
As smart as they are.
I want to place my money with you. And if it goes bad, I mean, I'm the one that made those decisions, right? And I think that's probably one of the big fears that people have and why they are tentative to put an investment, because they can't point the finger at the guy down the street anymore. Who's going to point the finger at somebody else, right? They only can look in the mirror, and so then it's what do you got to do to feel confident that you can take on that responsibility? And a lot of it's just learning it's teaching, it's listening to great podcasts, it's reading great books, it's connecting, with people like yourself. It's really trying to understand like what the business model is. And I think, my recommendation for people is to start simple. Maybe it's just multifamily, and, maybe you're looking at just value add properties. So, I'm going to invest with someone maybe like yourself who's going to buy. I mean, we did the deal. It was like Indiana, right? And the rents are $600 a month. And the plan is to get them to $700 a month through, some renovations and some proper stuff.
We're already getting that. It's amazing. It's
right?
fabulous.
Like, conceptually, it's easy to understand. You get it. Things going to appreciate in value. You're going to sell it. Versus, there's other types of deals where people are buying, Class A stuff in West Palm Beach, and it's different. And then you got to look at, there's some higher risk because there's no value add, right? You're buying this brand new thing and the returns are going to be lower. Maybe the risk is lower, maybe not.
Right. It's how you're buying it. Yeah.
So it's like understanding and learning what are the differences when you're looking at a property and when you're looking at a deal. And the more you understand it, the more comfortable you get. And then it's not as risky anymore because you get it, you understand it, you can take responsibility. You look at what the downsides are, you look at what the upsides are, and you make those decisions. You have any thoughts on that?
Well, yeah. And the biggest thing that I've found is that I want to surround myself with people that are like-minded, that are wanting the same goals as I'm looking for, right? I want to build generational wealth. I'm not interested in how long I'm going to retire. I'm probably never going to retire, right? I'm not interested in even entertaining the question, right? I'm going to do what I want to do. And
retirement's retirement itself is a mindset, right? Retirement, the definition of retirement is really freedom, that you have the time to do what you love with the people you love. You can go anywhere. You don't have to trade your time for money. And so you can retire. I could retire at 35 if I chose to live that lifestyle. It's a lifestyle choice, not necessarily like a time period. It's really like the government and the 401ks and all this stuff who's created retirement as like an end date that your life changes, instead of, you can live that same life at 70, wherever you have all this freedom that you can live today.
I'm going to be 60 years old next year. I mean, I'm retired pretty much, right?
Yeah, and you're retired because you don't trade your time for money every single day. You have freedoms. You can take your kids to Disney World, right? You can go live in Florida, whatever the like definition is. You can live that life if you've done all these other things up to that point. So yeah, I totally agree that it's not a date. It's a lifestyle.
That's exactly right. And the wealthy, they think about money differently. They think about money working for them, not working for the money. And they also design their life based, I want to know what is my life? What do I want my life to look like? And then how do I get there from a financial standpoint? Whereas, I never thought about any of that. When I moved to New York, it was for a job opportunity that I thought, and it never really occurred to me to really, did I want to live in New York? I mean, I really didn't, it's like I just did. And I ended up loving it. And now I'm ready to leave.
Yeah, that's right. Where are you going?
I don't know. That's really interesting that you say, and you're talking about freedom. What's amazing, what I think we very well may do. My daughter was just accepted to a college. And so we're going to be empty nesters, if you will. And I think we're going to go, it's a good time to explore what we want to do. She's going to college down south, and I think we're going to rent I think we're going to go rent somewhere.
Good. There you go.
And just live somewhere for a year and see if we like it in North Carolina, or then move to Florida and see if we like it there.
Yeah, you got the freedom, right? That's the benefit of what you do.
Right. So
that's
exactly the nomad. Somebody said that to me because they were like, well, "What are you going to do?" And it was like, well.
And no doubt, would you keep more of your money if you didn't live in New York between property taxes?
I mean, that's why I started keepmore.com. That's why I wrote the book. That's why, because I really feel like the world needs to know what we've discovered here. Mm-hmm. And we're not told this. We're told it's dangerous. We're told don't trust, and we've got to, a group of like-minded people. Our goals, you and me, our goals are the same. So we invested in an apartment complex together. I mean, that's really that's really as simple as it gets. And if you think about it, I really don't understand the stock market. How a company can have the best quarter it's ever had and make more money than it ever has, and the stock will go down when they announce that.
Yep, because it's expectations. It's all forward thinking.
It's emotional
expectations, and emotional, and that's the beauty of doing anything private for the most part, right? There, it's more numbers based. It's what the market truly is. It's value. It's not.
Well, I can tell you that 100% of the time, and without exception, that when residents move in, they pay the rent, then we pay the expenses, and the profit goes to the investors. And so when the net operating income of the asset goes up, we make money. If the net operating income goes down, we don't make as much money. So it's very simple.
Yep. Hey, so shifting topics here, we talked about tons of wins you had in your life. Give me an example of a challenge or failure you've had and something that you learned kind of became better because of it.
Oh God, goodness. There are a lot. I lost money in a deal one time.
Okay, let's talk about that.
And we lost money because I was a passive investor, basically. Okay. And I invested with a good friend. And this goes back to like-minded people, right? Mm-hmm. So he made some mistakes. There. And there was some inexperience there, which I knew my eyes were wide open going in. But, he made that right. I will tell you that. He made it right. He'll you want to invest with people that'll crawl over broken glass to make sure that stuff happens, the way that it needs to happen. What do you do
to make it? How do you make it right? So,
he kept doing deals and did better and better. Right. And took care of the investors and
from a previous deal that went south.
Correct.
Okay. Yeah. That's very admirable. Yeah.
And
so what did you learn? What did you learn from that?
I learned that all that matters is your reputation. It's really all that matters. And I also learned how important it is. I talk a lot about in the book about the mindset of abundance that the wealthy have. You see, just because somebody else makes a lot of money doesn't mean that I can't make a lot of money. This isn't a zero-sum game. There are opportunities everywhere, and things are going to go up and things are going to go down, but you need to really understand why it happened. Right? When you're in the stock market, you don't really, I'm invested in the stock market. I have Apple, right? All I know is that I have an iPhone and that, it works. And I'm talking to you on a Mac computer and that works. But I don't know what their P&L is. I don't know what a China trade deal is going to do to their business. I don't know what their market share is in every country around the world. But I can tell you for every one of our apartments, what our rents are and comparing, in relation to everywhere else, what the competitive market looks like. I can tell you what's going on. And I just prefer to invest with people that can tell me that. Right. And that information is available.
That's great. So what's next over the next 3 years kind of look like in your life? That vision of kind of where you're going.
Well, so, I'm expanding, we're buying more properties, and we've changed a little bit. We've started doing some Class A things like you're talking about, but we're buying from the developer, which is a whole different thing, right? So you don't have a broker involved. You don't have, it's kind of a way to buy, Class A apartments that without as much cost on the front end. So that's been very eye-opening for me because the demographics of our country are changing. They always change. and so people like myself are going to different parts of the country from New York, and we're renting for a year because we don't know where we really want to be. Okay. Or I don't know if I'm going to like South Carolina, whatever. And so, but focusing on those growth markets, of which there are many. And I also think that my evangelism, I want to write another book about different types of alternative investments, right? Where I'm going to have some guest authors.
Okay.
We'll talk about that.
That's awesome.
And I'm just going to continue to try to do good in the world and spread the wealth, right? Keep more. I mean, that's really what it's about, because people just don't know. So many people just are blindly following.
That's awesome. Speaking of books, any books that you're reading now that you're really enjoying?
So I got to tell you, I spent the last hour talking about not playing the game and all this. I still think you need to understand the game. So I have a daughter, and people are like, why don't you just get her into your real estate business? And I'm like, yeah, that'll come. That'll come. But I think she needs to go to college. I think she needs to do the stuff so that she understands what it's all about. Right. So I've been pretty focused the last 6 or 8 months. My husband was Mr. Mom in the early days, right? And I had a big job, and I was flying all over the country and the world doing this, that, and the other thing. And so I've been very close to my daughter over the last 8, 9, 10 months. We've visited colleges. It's crazy how this all is. So that's done now. She's set, at least for now. And so, I plan to do more reading in the future, or other than
college admissions.
College admissions, yeah, exactly. Yeah. But we have a place up in Woodstock, New York.
Okay.
And so I'm reading a lot of history around from wilderness to Woodstock. There's a book called
Awesome.
The Catskills, from wilderness to Woodstock. It's like the history of the Catskill Mountains. It's fascinating, actually. I'm boring like that. I'm kind of a history nerd.
Yeah, that's all right. So where can listeners connect, find more about you, get access to your book that you mentioned? And
Sure. So you can find me at keepmore.com. Easy peasy. You can find me at hiddeninvesting.com. And either place, I have all kinds of links to the book. And you can get the book free, all your listeners. Just when you're checking out, put Keep More in the as the code, and just pay for shipping and printing, and it'll show up at your house just like those checks from passive investing.
There you go. Awesome. Well, I appreciate you coming on the show today and sharing kind of all your wealth and knowledge and experience, and hopefully opening a couple people's eyes to this whole alternative world of private, secure real estate investing. So
it's a wonderful thing, and we've got a lot to be grateful for, and happy holidays and early year.
There you go. All right. Well, I'll talk to you.